All right, the S&P 500 and the Nasdaq 100. We're going to jump right into it today. So we're going to make this pretty quick. Happy Mother's Day to everyone out there, so have a good one. Number one, we're going to jump right into Nasdaq where you're at. You kind of came right into our level we were targeting over the the course of the whole week, going into 1837. We got like right into 1835 and kind of got rejected. Not super concerning, making higher lows still on the charts. As you can see here, we go into ES, very similar structure, making higher highs, higher lows. You look good in the 4 2-hour charts as well. You go back to the daily, you look here. I mean, you're getting back into all-time high territory as well. But you can see those levels are getting tested, the 52, 58, etc. Like, so they're all being tested. The big shocker here was Dow actually recovering. Now, I kind of can't believe Dow actually did what it did. You saw all this like chop zone here and you went straight through it. Like, that's a good note. Like, granted, it didn't happen in one candle, like in one day, but you can see like every day they try to reject and it just pushed you up and up and up. And then once you broke out, you broke out. So that's another good viewpoint there, is that it's not just one area of the market. And we saw a little bit of a rotation that did happen. Like, we saw originally Dow get some love and then it kind of rotated back to NQ. And we talked about going in from Thursday and Friday that we expected, since Dow had such a good push on Thursday, that it would flow into NQ. And, guess what happened there? NQ ended up pushing into our target. Now, it wasn't the greatest push or the craziest, but you ended up pushing into our target, so it made logical sense. Go into SPY, you look at Qs as well, and again, you're damn near back at all-time highs. So what I'm going to say here now is, just like down here, I'm going to urge you, when you're down near massive support, be cautious. Don't start hammering shorts down here. When you're at highs, hitting all-time highs almost, maybe you don't start hammering calls. Maybe you wait for confirmation of the break, the retest, and continuation, just like we did way back here when you broke 2021 levels, where you broke, mounted, and went crazy. So like, understand where we're at and kind of the situation and how much risk you're putting on the table by just going long at all-time highs. Definitely throw a risk out there on the table. Now, today we have a lot to go over, so I'm going to try to cover it as quickly as possible. We have CPI, PPI in the week. Also, too, we're going to go over what this guy said, Tom Lee, about the market. Everyone kind of thinks he's a joke, but what I will say is, apparently, compared to like all the analysts that were like on CNBC, this guy was he was right the most over the past 2 years. I'm probably gonna let you know that right now. But let's get to this real quick and then we'll get back. Okay, so this is probably not the first time that you've seen me talk a lot about the sponsor of today's video, Moomoo, but I haven't told you about why I decided to partner with them, and I just want to be transparent with what's happening there and why they're going to be a partner for the foreseeable future. So partnering with Moomoo for me has been a little bit of a game changer in what we're doing with the channel, because we like to do a lot of free content, but ultimately what we're doing with them is unlike any other trading platform. Moomoo has a super robust, user-friendly mobile platform when it comes to news, when it comes to options, or watch lists, everything like that. The mobile and desktop allows me to effortlessly look through and analyze everything that I'm looking at. It's all kind of in one place, especially before executing anything. And speaking of executing, Moomoo is offering a 0 contract fee for options and only charges 50 cents when you're trading index options. So very important to know that as well. Unlike other platforms which have a similar offer, Moomoo provides me with deep analysis and unusual options activities. So instead of using other platforms, I can kind of do most of my work in one platform just like this. And this is the desktop platform, just so you can see, where I can look at unusual activity as well. If you are interested, there's never been a better time, because right now new users will get a 1.5% cash reward up to $300, or if you're just getting started, you'll get 7 free fractional shares up to $5 per if you make a qualified deposit bonus. Just go to moomoo.com. It shows you all of this. It's right there in front of you, so you can make sure you have all that understand. They want to help you kickstart your journey when it comes to investing. Check them out. The link is down below. Over Tom Lee. Tom Lee has made a pretty big assumption, whatever. He expects inflation to start plunging into the rest of 2024, which I'm going to go into what supports this thesis. Okay, I'm not biased to that point yet, but there's areas that I think that will impact that. Okay, so basically Tom Lee says that this is one of the bigger opportunities going into the summer, that he thinks inflation is set for another steep decline, right? Because again, if you look at inflation, you're never going to get this like perfect reaction on inflation, which people think. So in reality, just like the stock market slowly moves up like this, I mean, that's typically how inflation moves, and typically how we cut rates on inflation too. Is we cut, we raise, we cut a little bit, then we raise more, and we cut a little bit, and it's like that. Well, inflation's been moving like basically like this, and then with what happened with raising rates, it went like this, and then boop, and then we're back to being like this. Okay. This is healthy movement going sideways. The good thing is that we're not moving up and then down and then back up. That would be a massive issue. So now inflation is basically dropped. We're almost where it needs to be. We're flatlined. And we're kind of just chopping here, waiting for something to happen. Now, the biggest indicator, in my opinion, for inflation that has helped us signal when inflation risks are coming is crude oil. That has been the situation. Now, crude oil has been very interesting because over the past year and a half, is you've seen the 200 SMA. This is I'll change the color real quick so you can actually see it a little bit better so we don't get these confused. The orange line will be the 200 weekly. This is the 200 daily, the yellow line. Okay. So if we look at those lines really quick, the weekly has been a brick wall. I'm talking this thing is like the Iron Curtain. It's not going down. You bounce over and over and over, and it looks like oil is set to go to that level again. Okay, now the other part here too, which I can actually overlay this so it's really clean, really easy for you to see. It may not be like the most drastic line, but you'll be able to see it. Okay, so if we look here, you can see that traditionally, we go back down here, when oil is dipping, right, it has signaled a bounce on the market, and it's a little bit delayed because it takes a while for the oil prices to affect our market, right? We know that. And so while oil was cheap, the stock market kind of went crazy, and then it kind of bottomed out here, right? Bottomed out. And we still kind of didn't care going into January this year, right? Really interesting. Now, when you start getting back up to the 200 SMA, again, this data report relies back on this data back here, and we saw the market pull back, okay? Now, we can go back here, go back to August through basically October last year. Oil was going crazy. Guess what happened? It negatively impacted the stock market, right? The orange line here is the stock market. You can go back even further. We can go back, 2020, 2022, right? Oil goes straight up, the stock market goes straight down. It was a great signal on inflation and what was happening in the broad market. Okay, so just giving you a little bit of a visual there. Now, this is the interesting thing. Oil has been kind of moving up, and we had a little bit of a decline, but nothing crazy. Now, oil started to drop, and it's popping back up. But what the interesting thing here is that this data right here is not being shown on our inflation reports. The interesting thing with inflation right now is that oil and energy, as far as fossil fuels, etc., is not the negative part on what's hurting us with inflation. It's more healthcare, rents, shelter price, obviously. Those are things that are affecting us, and those won't be affected by the only way that shelter prices go down is if you lower interest rates. It's just the reality, or unless everyone loses their job and then you are homeless, and then we have bigger fish to fry at that point, which that won't happen, especially with the state of our country. It's just not going to happen. So anyways, this is the best metric in my opinion to get an overall feel on what's happening with inflation, and I do believe this will positively affect the CPI reports. If not this week, I don't think this will show up on the CPI report this week. I do not think so. I want to make that really clear. Most likely this gets impacted into June's reading. Okay, so going into June, that over here, that's where this data will actually apply. So what's going to happen here is you might get some more of this data, which could actually be kind of bad. However, I think that'd be a trap in my opinion. I don't think it's going to keep accelerating at that point. And obviously it's not, because oil is dipping down, and oil is also making lower highs for the past basically year and a half. Even though you've had your Iran-Israel conflict, oil is doing nothing, which is honestly really, really good for us. So things to be thinking about, things to be looking at. And that's where I think Tom Lee's thing does play out, because there's area of the markets that do look good, and we also have what's happening with, the easing as well as from the Fed with their treasury. So basically they were just dropping off $65 billion a quarter, whenever the date was. They dropped that down to 25 billion. So again, or it was a month, sorry. So that's also really, really good as well. So across the board, things are setting in a good place. What we want to see here is the dollar start to dip down below the 200 SMA and hopefully just get to that point. On the other side of this too, we're looking at the 30-year yield, and the 30-year yield is just kind of sitting at our key level here, or a little zone. You're broken, you're retesting, and you're going to get a little bit of an answer this week with CPI. So CPI and PPI go decent, halfway, whatever. You're going to drop quickly back down below 4.42, but we'll have to wait and see. Okay, so that was a little bit of the boring stuff, but we had to cover the boring stuff before we can get to the good stuff. And just remember too, this week you have PPI on Tuesday of this week you have PPI, and CPI on Wednesday. Now, CPI has more cause for concern. It's a bigger day, it's a bigger data pool. Just know that. Okay, going into this week, a few things. Monday, Tuesday, you're probably gonna get some decent action Monday. It'll probably be decent. What I do want to say too is, as we go and look at some of this data on here as well, I want to be really, really, really clear. I don't think you're going to have normal action. So normal action is we've been getting increased volume over the past year into the end of the week. We have not had increased volume over the past 2 weeks. It's been treacherous. So I want to make sure that's known too. We're not in the realm of normalcy here. So be careful. Okay. Now also too, going into where the SPY and Qs are. Again, like I said in the beginning of this video, be very, very, very careful. We don't want to be degenerates here, right? Now, a few things to mention is as we've been moving up, the only cause for concern too has been a little bit on declining volume. But again, I say this all the time, you don't need to see incredibly high volume to be pushing in a specific direction. You don't have to have it. It just doesn't have to happen. What you do need is increased volume on a bounce or a reversal. That helps you. So like at lows down here, guess what happened? We had our highest volume going all the way back to basically March 15th. Right? Not a coincidence. So things to be thinking about with how we're moving and how we're acting here. Us too came to our Lux level down here. You're coming into your top Lux level up here. So again, very interesting where we're at. We're coming in pretty big pivot points, and it's not just my levels, it's also the Lux algo and things that are happening there as well. So just know that I'm not just making these levels up, they're also there just for your help and for your assistance. QQQ, you're coming into your level up here as well. Obviously a bigger range, which is why I think you should be more concerned and more cautious. But if you're looking at NQ or Qs in general up here, where you can get more bullish up here on Qs is when you get above your key level here around 18.37, which was your highs in this little range here. You get above that, I think you have room back into like 18.5, a little bit of scalps to the upside as well. But that's what I'd be personally looking at. Nothing crazy, but definitely have some good opportunity across the board. So again, it does get me excited. It does give me cause for like, okay, maybe we're getting out of this. Maybe things are looking better. But again, volume has significantly declined on Nasdaq as well, as you can see. Now, again, the highest volume was down here at the reversal point, but still a little bit cause for concern where we're at with that. Just we want to see some. I want to see a little bit of a pickup, especially if we're going to break out to the upside. Okay, now stocks, etc. You want to see all these. I understand. Also, too, guys, if you're interested in these indicators, right, the volume, the Lux levels, the link is in my bio. The Lux algo link. Use code OD40 for 40% off your first purchase, just to let you know. Now, let's go over some stocks really quick. Number one, NVIDIA. Everyone wants to talk about NVIDIA. Again, I'm going to say this on repeat. Now, I think NVIDIA, based on TSM's earnings, is sitting in a very good spot. And based on every semiconductor's earnings, to be honest. But yeah, so NVIDIA, be careful. Above 906, you have room into 920. But again, where you really get bullish is back above 924. Until you get above 924, be cautious. Now, this week, most anticipated stock I'm looking at here. Now, I've been saying if Apple breaks below 200 SMA, I'll go short. But Apple just released some news about freaking time. About time. If you didn't see, Apple and OpenAI have agreed to bring, or they're very close to making the deal happen, where ChatGPT is coming to the iPhone. This is pretty interesting. Now, I don't want to say this is going to fix all of Apple's problems, this and that and the other, but I do believe this is in the step of the next phase of iPhones, etc., right? And this could really bolster the sales, right? And I think the market would take it that way, right? So that's the more important thing. How will the market take it? So a few things here going into this week. As long as Apple holds above the 200 SMA, it's great. I mean, it's even a stock buy at that point, right? Because your risk reward is so simple here, very, very simple. Just even buying stock. If I'm buying around that level, stops below lows, targeting 187. At that point, still a 2.7 R trade into 189, a 4.5 back into highs. It turns into like a 9.5. So again, still a great looking opportunity above the 200 SMA, and we've had great reactions off that 200 SMA. Over the past year. I mean, look at the reactions over and over and over when you get back above that level. So again, things I'm looking at here on Apple, probably my most anticipated stock would be looking at it. But again, you can't overlook Microsoft. I think they might be one of the big winners in this as well, right? Since they technically own OpenAI. So what's happening here is Microsoft's been in a range. Like, this is like the craziest part of everything happening here. Like, and we can quickly clean up this chart a little bit. I hate having all these levels, but they're all kind of valid. So Microsoft's been trading in a clear-cut box. We love the rectangle tool around here, but you're just trading in the same levels since basically the beginning of the year. Nothing's changed, nothing's happened. Now, the cool thing about this is when you get the breakout, it's usually awesome. If you were with us, from November last year, remember when we finally got the breakout of this range down here? 384 to 360. Remember how many times we bought at 365 and he finally broke and it was like a parade? Yeah, that's what's kind of happening here. You ever get the break back above 430, you're probably running towards 450, 455. I don't expect a monster push to 500, but it's still a lot of potential there. Now, also too, going into this week, you're trying to get back above 415.4. You've seen a key line in the sand, 1, 2, 3, 4, 5, 6, 7, almost 8. Now trying to get back above it. So above 415, room to 9 or 421, 424 could be really interesting. Microsoft's a must watch with Apple as well here. So definitely watching that. Another stock I keep mentioning is Home Depot. And this is, again, one of my boomer names. Gonna leave it out there. I need to wrap the video up. It's already going too long. But Home Depot is interesting. I like where it's at. I think it's a great dip buying opportunity, holding the 200 SMA. If inflation reports come out bad this week, I think it's a better buy. Personally, I think the dips on Home Depot are some of the juiciest opportunities out there. Your expectation here is once interest rates get hit or they come down, you're going to expect builders to take full advantage and go full steam ahead on what's happening with homes, and you're going to see a flood into the market of home buying. Personal opinion, right? You're already seeing builders still dominate. That's the thing that's holding Home Depot up. So Home Depot above 345, I think you have room at about 356, but honestly, I think this thing could go ballistic. I think this thing could really run past, realistically, all-time highs. It's just what I think. It's what I believe. I think you could go for a run. It's one of the strongest names out there, especially when we look at where it's at. Again, mounting preview. It's beautiful where it's at. I'm a huge fan. Love Home Depot. Something you need to keep on your board. Again, and dated calls aren't that expensive either. Even though they have earnings, coming up. I think it might be this week. But I still don't care. I love Home Depot. May 14th, Tuesday. So if you want, you can wait. You can be patient until after earnings. I don't care though. I love Home Depot. I'm a bull. Personal opinion. If you have questions, comment down below. See you guys tomorrow. Have a good one, traders.